Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, April 6th. We got just one economic news release scheduled for today. Tomorrow will be the big one with the Bureau of Labor Statistics coming out with their job numbers coming in. And, as always, every month, those are the big numbers we always kind of watch for. But today we got the weekly jobless claims. So last week we had 258,000 people apply for unemployment. Forecast for this week is at 251. And it came in down at 234,000. So great job there. Last couple of weeks we were getting kind of high in the 250 range. We were kind of averaging in the 230s, and now it's kind of jumped up in the 240, 250 range. And so it's nice to see it kind of come back down, have fewer people apply for unemployment. So that's why I was kind of saying it'll be interesting to see what the participation rate will come in, see how many more people came into the job market, which may have maybe the reason why we had more people applying for unemployment here. Let's go ahead and take a look here at the headline news. Stock market's up a little bit today. Yesterday it was up quite a bit. Like the Dow was up like over 200 and before selling in around 40. A lot of it has to do with the after effects of the Fed minutes right here. The minutes, if you missed it yesterday, had two important parts there. The first off was they talked about the balance sheet, that they're kind of surprised investors. Investors thought they were going to start reducing their balance sheet in 2018, but the minutes came in and it looked like they could be starting late 2017, start reducing their balance sheet, which is about $4 trillion worth of mortgage-backed securities and bonds that they've been purchasing during this whole credit crisis. So, in quantitative easing, so they thought that was going to be in 2018, but now it looks like it could be much sooner than they expected. So, as a reaction, we had a mortgage-backed securities worsened by quite a bit. A lot of it came in, and then we had another loop in there that. Loop that came in that the Fed, a lot of Fed members were saying that they thought a lot of the stock prices were very high for the standard measurement for where they should be at. They thought they were very high. Then all of a sudden, the stock market started reducing from like Dow being up like 200 to almost closing. I think right around 40. A lot of it had some huge changes when that came out. That the Fed thought even the valuations were high. That came out, and that kind of helped rescue the bond market. As you'll see coming up, bond market rebounded a bit as a result of that, because they're putting those into safe haven. But it is definitely had them threw them for a loop there. And then also today is the starting of the Trump and Xi meeting from China. So of course this has a lot of investors on nerve, because they don't know if this is going to be a good meeting or if it's going to create more tension between the two countries, or how this is going to proceed. But it has a lot of investors on edge here, and they may even actually, this could actually have more powerful message than the job numbers tomorrow, because this is kind of what they're really looking at to see how this proceeds. If it's going to be, again, create more of a contentious relationship, or is this going to be will we be able to get through this pretty smoothly, especially with some of the tough campaign pledges that Trump had spoken about. So it'll be interesting to see how this plays out here. So let's take a look at the bond market. As you saw, we did rebound yet. See, we touched way down here by the 10-day moving average. We rebounded. We even had price for the worst, but we basically closed about where we started the day off yesterday, which is a good sign here. Today, we start off where we left off yesterday, basically, and now we're down about 12 basis points. So it's enough for pricing to worsen today. We have job numbers coming out tomorrow, remember. Those could come in a little hotter than we expect. Like, I think they're expecting around 175,000 new jobs. So be prepared. It's possible that, this could push us back down. Usually when we get to this level, we get knocked down. And this is, we haven't been able to really break above this level since the election. So this is something I would, if you're out there, you have rates and you're kind of floating, I would probably start locking in while we got the gains here. So just to be on the safe side here. All right, folks, I hope you guys have a great day. If you guys want more data throughout the day, just come over to Twitter. You can find me at Mike Bjork on Twitter. I do post on Twitter updates throughout the day. Also, I'm a loan officer, so I do mortgages. I help people with financing for purchases as well as refinancing. So if you have any questions or anything I can help you out with in those avenues, please feel free to reach out. Again, I'm on Twitter, or you can just simply email me where you found this where you found this video, and I'll be more than happy to try to help you out as best I can. All right, folks, you guys have a great day. Thanks so much for watching. We'll see you guys tomorrow. Bye.